Net's down about 12% after hours. The real question is what happens tomorrow. Hey everybody, in tonight's video we're going to go through 5 stocks to watch for tomorrow. We have some earnings plays, we have some stocks that are breaking out on previous earnings moves that we should probably go over, and we have some stocks that are actually hitting all-time highs. So there's the gamut. We have a lot to get through tonight, so let's just jump right into it. As always, subscribe to the channel, click all notifications, because what we go over here is timely. Now, in regards to net, you closed at 50 and 3.7, or as I'm going to say 3/8, just from because I'm older and I remember fractions. But you see this move down to 44. This is pretty much the exact opposite of what you want to see. Now we're going to get into why. I do want to point this out for those that have been watching. As I always say, subscribe, because what we go over here is extremely timely, and make sure you hit the all notifications button. Also, if you do, you're going to start seeing shorts pop up. Some of them are only going to be linked in the community, and you're not going to see all the videos, all the shorts, unless you are subscribed. Anyway, see this link right here? See how you're just kind of hanging out, and it's just, you got this long-legged doji, which signifies uncertainty. If you break that 15-minute bar rather, I don't think you need to do too much here. But if you can flip this, that's a pretty interesting spot to see how it acts into the conference call. Again, some people will see this before the conference call, some people will not. That's why I'm saying it's very timely, and it's something that, you might want to subscribe to. So that's it. But let's take a look at these earnings. Now, the system I'm using, because I get asked a lot, and I will put, there'll be a link in description. They give you seven days free. I don't even think you need a credit card with it if you want to. It's Bazinga. But anyway, let's just go through the sales. 253 versus 250, up 6 cents. C's EPS 4 to 5 cents versus 1 cent estimate. Sales 273 versus 274. When you start seeing this, it doesn't look really that bad, right? And then you start seeing fiscal 22, they're looking at 11 versus 12, and then they're looking at sales 974 versus 971. The issue from what I'm gathering is the fact that it just didn't come out and absolutely decimate. If we take a look at last quarter, denoted by this earnings sign down here, you can see very clearly that it just absolutely decimated the quarter, crushed it, right? We didn't do that this time. We didn't really raise guidance. We're kind of getting this milquetoast. Yeah, things are good. We're kind of raising a little bit. I think that's adding to pressure. Now, we saw something very similar to that today in D-Dog, and this is somewhat troubling to me on a macro scale, because the one sector that was really strong last quarter, if you remember, was D-Dog, was all these names. Even Carvania. I want to go through this, but Crowd is, I got Carvania on the brain. But remember Crowd? And how we ran up and then gapped down on that, even though it was a good quarter, and the quarter before it ran up. So where does that leave us? That leaves us looking at net and going, maybe it's not something that we really need to pay attention to. I'd be careful here. I want to go over this, but these to me are setting up to really come in a little hard here. And I do want to go through the leaders. We're going to do that at the end, because we really need to talk about the action in tech right now, and what's exactly happening and why it's happening. We went into it last night a little bit, but I think we need to dive a little deeper. So let's get through a couple more of these. Carvania, I mean, it wasn't good. Everyone knows how I feel about this company. I actually think it's a zero. I get told a lot that stop talking with so much conviction, but I think it's a zero. I think if you look at the space, it's pretty clear that some of these are going to go to zero. If you look at Vroom, to me, this is the next Vroom. This one broke $1 finally. I think today was the first day, or yesterday. Yesterday was the first day it actually broke $1. You all remember this one. It was one of those we have to own. It's $70, right? Goes up to 80, and now it's at 98 cents. So I think that this is where Carvania is going to head. I think it's going to be a matter of time. Now, if you look at Carvania, it says it's not providing quantitative outlook at this time. So they're not giving guidance anymore. Essentially what they're saying is we're just not going to tell you what we're doing. Now, they lost $2.67 versus $1.95, $3.39 versus $3.78. That is not a small miss. That is tens. I mean, that's an inordinate amount of money to just, I was going to break it out, but just look at the percentage difference on this. No guidance, no reason why. We're not going to tell you what happened. We're not going to talk about the loss and why the loss is greater. There's a lot of issues here. And what's so fascinating to me is you start going through some of these from November 2nd, November 1st, right? And then you look at it and go, why would somebody come out and upgrade the stock with a $20 target price? And then you're dealing with this. And I think there's a couple reasons for that. So there was a huge bond offering. And if you've been following me on Twitter or Instagram or on YouTube, since back here, we've been short this, perma short, added here. Look, the company's got real problems, and those problems are not going to go away. And I do think that there's a restructuring that happens here, and I think it happens with Apollo and the bonds that they own. I think we're going to see something like that as they buy hard assets. But the bottom line is I think that this can go a lot lower. I think this could be the next Vroom. I really do. So I'll watch that 2013 line, but to me, I think you're going to just take out the lows. I think that that's pretty much almost a gimme at this point. So it's still a short in my opinion. PayPal's down after hours. You sliced right through that 79.34, which was minor support. We hit there 4 times, 1, 2, 3, 4, and we held off 4. And now we just kind of sliced through it. Now, I was looking at this after hours because Elliott Management has a stake in this, an 8% stake. So I think it's a 9% stake. I don't think Elliott Management's going to go away. Now, I don't know that they're going to buy in the open market, but they're pretty aggressive and they stay for a period of time, right? They also have that position in pins. I'm not sure how this plays out, but this is one tomorrow off the open. I will be watching very carefully and looking for some kind of bounce. I'm not so sure going into non-farm payrolls. I want to go too crazy after hours tonight. Reminder, we have non-farm payrolls tomorrow morning. But this was not a great report. So if you take a look, we're very pleased to be working with Apple to enhance our offerings on PayPal. So one of the issues they have is this line that they put in their bio where they were saying we're going to be able to take $2,500 out of your account for misinformation. Then they're saying they didn't put it in. Now it's floating out there that they might have put it back in. There's a lot of where they're not stating the mission and they're not stating what they're doing. Their goal is to take a payment system. And that's it. And when they start getting into the other stuff, I think it scares people away. And then you have competitors like Stripe, which are a lot better, in my opinion. But you're at $1.08 versus 96, so you beat. Sales beat. EPS, $1.18 versus $1.20. Net revenues, this is definitely an issue, isn't it? We are coming at 7.35 versus 7.75. The fact that they're saying that they're raising guidance is kind of an interesting thing. 7.35 versus 7.75. So this is kind of a mistake that they're putting in there and trying to give you this, look at next year. We're gonna raise guidance next year, but you're not really raising guidance. Basically what you're saying is we're gonna cut costs, so it doesn't matter that we're losing revenue. I would argue that it does matter that they're losing revenue, and I'm more interested in why they're losing revenue and what they're gonna do to stop that. Again, 7.35 versus 7.74 is not a small miss. That's a huge miss. So we have to understand what's going on there. Now, Square after hours, what we're seeing is we're just seeing the stock rally up precipitously and then just drop right back down a little bit. But this was a fairly good quarter, and this could actually be very positive tomorrow. And I just want to point something out before we even get into it. You've had positive moves in this stock from opening down before. Won't be the first time, won't be the last. So we have seen these moves where you have these reversals after you gap down. So I just want to say that just because you're up a little bit, which you are up, you're up about 10% on the day now versus where you closed, right? So you're up about 6 points, 10%. So you just want to watch this, okay, tomorrow. Definitely have this one on your list. Let's take a look at earnings. So here we have 42 cents versus 24. That's a beat. That's a real beat. Sales, 4.51 versus 4.5. Okay, why is this important? We beat on the revenue side, and we understand the current market environment that we're in, and we cut costs, okay? That's really very important to me because what they're saying is we get it. We know that we have to keep increasing or keep revenues where they need to be, and we know we have to cut costs. So this was a really good quarter. This is one that would definitely be on my radar tomorrow, and I would suggest that you might want to watch that one tomorrow as well. Now, coin's all over the place after hours, 57.80 right now at the time of filming this, closing at 55.80, and now we're up about $2, right? And let's just take a look at what's going on after hours so you can get a sense of it. So once again, you're kind of slapping around. You break over that 15-minute bar. run yourself up. These 15-minute trades, they do work. Whether you take something off or you don't, that's up to you, obviously, but they do work. Now, once you're here, you can see the rejection. So now we know already that we'd like to see a close on a 15-minute bar above 60.85. You might want to remember that level. But I didn't think that this was an awful quarter. So sales of 576 versus 659. You have to understand that we were basically just looking for just Armageddon here. No one's buying NFTs. No one's really trading crypto anymore. So even though you missed, you didn't just get absolutely decimated, and your total trading volume is 159 billion. That's nothing to sneeze at, right? Subscription and service revenues 211, which is probably more than they expected. But monthly users are down below 9, which is not what they want. And they expect the service revenue to be 700 million, subscription and service to be 700 million this year. So that's a solid business that they really are just pushing, the subscription and service revenue model. So I get why we're up. We're up because one, it was not as bad as we expected, and also that they are growing their revenue. Now, I just want to run through these really quickly, okay? There is nothing redeeming about these and what's going on. Is we're going to call them the four horsemen. Apple's completely and utterly breaking down. If you start breaking through this 136.23, you start breaking through this 133, which I do think happens. I'm not saying you're not going to H and then come back down. Most likely that is what happens. But if you start looking at what we're going to refer to as, the four horsemen, and start looking at Google and what's going on here, we said 88, then we came up with 84.60, then we broke that. Now we're looking at 76. Looks like it's next on the table. Amazon's breaking through every single level here. You're forming this H on this. I have the pre and the post in, just FYI, if you're looking at this. But if I break that, boy, oh boy, we have some issues. Okay, if we break that on Amazon, okay, we're going to have some real issues there. Meta, okay, this is another one because we always say, quote, it's cheap, right? We talked about this. Cheap is a relative term. So during the great financial crisis, we actually had Bank of America trading under, forget about its cash, but under its entire credit card business, right? Just the revenue from the credit card business. So it can always get worse. And this video is going to go a little bit longer than they usually do because there's a lot to go over. Microsoft completely cracked today. So whether you call these the four horsemen of the apocalypse, however you want to refer to them, there's probably five. I could actually go through another one as well. Does not matter. To think that the NASDAQ is going to go up, why that's going on, is delusional. It's just not going to happen. You could see the SPY go up because of the diversification, but even that's going to be hard. In the free newsletter, we walk through this line. Make sure you subscribe to the free newsletter. There's a link in description. But we went through these lines, and this stuff's really clear. 362, you just got to watch. Okay, just be really, really careful here. All right. I can't stress it enough. This is not the time to be bottom feeding. This is not the time to really be looking for, quote, new leadership. You have a completely different tone from the Fed chairman yesterday than you've had. You just need to be prudent right now. Okay. This is not just looking at technicals and making a decision. This is understanding the macroeconomic landscape and how it's changed. Okay. We are emphatically, if you look at these breaking levels, but we are emphatically staying above that 4 now, and nobody seems to care, and no one's out there buying protection. Why? Because they're not buying protection, because they're just selling stocks, right? They don't even care about the protection anymore, right? Someone's going to give me another reason for this. I'm just telling you, they're not buying puts. If they're not buying puts, they're selling stock, and we can see that by all the ones we just went through. The main leaders of pretty much every mutual fund are being sold indiscriminately. And we've seen it now for the past 3 days. That's it. If you have any questions, please reach out. To preview the trading community, there is a link up here in the top right corner. Trade to win tomorrow, everyone.